Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec, on Tuesday the 17th of December. There's a slight degree of risk aversion that's just crept back into the markets in the last 24 hours. It seems as though the Phase 1 agreement is has not been signed yet, and they sort of have to wait obviously for the translations of the text into English from Chinese, and it'll be interesting to see if there is anything sort of hidden lurking in that translation that could potentially sort of put a bit of fly in the ointment of the agreement. There's also potential that President Trump is set for an impeachment vote in the House of Representatives tomorrow, and that again could be a reason why we've just seen a bit of a retracement of the risk move. You've seen that through a little tick higher on the VIX today. You've seen the dollar sort of ticking back higher again. You've got treasury yields which have come off a little bit, and you're broadly seeing safe havens just sort of finding a basis of support. Gold continues to sort of hover just underneath that 1480 mark. The technical implications of that, I think, obviously will be explained in the gold video in a bit. But look at these equity markets. US futures just sort of coming off a bit. Another strong move to all-time highs on the S&P 500 last night, but just coming off the top a little bit on the futures, and you've seen that drag through the DAX and the CAC today. Now, in terms of the big mover on the Forex markets, we've got sterling, which is over 1% lower now. You've had the suggestion, or the announcement from Boris Johnson's Conservative government that they're going to be putting into law a prevention of an extension to the Brexit transition period beyond December 2020, and that's sort of taken some of the sheen off that sterling move, and I'll talk about technical implications of that as well in my video. But that, interestingly, is helping support FTSE 100. That negative correlation between FTSE and sterling seems to be back in play a little bit there today. Also, we've had the RBA minutes out overnight, and again they're sort of a little bit concerned about wage growth being a little bit weaker than they'd hoped, and that's sort of impacting on inflation potential, and also that's sort of opening the door to a possible cut in early 2020 for the RBA. So subsequently you see the Aussie dollar under corrective pressure today, so adding into the mix of the slight retreat in risk appetite as well. Now, in terms of data points today, we're looking at the UK unemployment, or employment data I should really say, at 9:30, where unemployment is expected to tick a little bit higher to 3.9%, but also watch the average weekly earnings dropping back to 3.4% from 3.6%. That could have an impact on sterling, although, to be honest, I think it's more, again, the political aspect of that's moving sterling around today. Later in the afternoon, we've got a little bit of US housing data. We've got the building permits and housing starts. Building permits slightly down, housing starts slightly up. Little real changes though going through those numbers there. Okay, so let's have a look at FTSE 100 as my chart of the day. Now, what we saw yesterday was a huge move higher on FTSE 100, around about 2% higher on the day. Big breakout above resistance, pulling FTSE to multi-month highs, about 4-month highs above 7445, key resistance area there, breaking out, and that breakout has certainly been confirmed on the RSI, mid-60s, again, 4-month highs there. Stochastics and MACD lines are still rising, so there is still a pretty positive technical setup to this move, and I think you'd be looking at using any weakness as a chance to buy on FTSE 100. 7445 clearly is a basis of support, but you could sort of go to 7,400 up to 7445 is sort of a pivot area and a basis of support there, and it looks as though that given the momentum indicators and the breakout, I think it's looking fairly positive to use any sort of unwinding move into into support as a chance to buy. You've seen a little bit of a drop back on momentum indicators, threatening as the market has sort of moved around today, but ultimately I think weakness is a chance to buy. You haven't really got any real resistance until that all-time high again. Until that August 2019 high at 7725, and I think that ultimately that will be tested at some stage in the coming weeks. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.